You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's popping off in the world of futures options? Well, let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as some of the network upon which all of you folks are binging. And if you haven't done so yet, what are you waiting for? Head on over, check out the pro, theoptionsinsider.com/pro is the place to go to learn more. You get oddities, you get pro Q&As, you get exclusives, you get early access to a whole bunch of stuff, and you get awesome giveaways. Congrats to Eric Nelson, who won our Pro Trading Crate just yesterday. Hot off the presses for him. Get your name in the hat for the July Pro Trading Crate now. Theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old TWIFO program today, I am pleased to put him back to work. Double duty for him. No rest for the wicked. None other than Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to TWIFO, sir.
Always a pleasure to be back here on TWIFO. This week in Futures Options, getting in touch with my inner Mel Allen.
Our chat is just asking again, sir, because this is a new show, and since crypto is in the purview of this program as a listed future and option, they want to know if you're going to mention the $113,800 new all-time high of Bitcoin today, sir.
No, not at all. Doesn't exist. Intrinsic value is zero, so it does not exist to me.
So that means there's a hell of a premium on that. You should be all over that. Sold to you, sir. Collect,
no kidding.
Harvest the old risk premium, sir. $113,000 worth. Good stuff there, listeners. Is there good stuff afoot in the markets? Let's find out. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down what's lighting it up to the light side and to the dark side this week at CME Group And this week, a little bit special because, of course, we were off last week for the July 4th holiday. Uncle Mike was traveling. I'm not a monster. I'm not going to make him come in to do the show. I, of course, was traveling as well. And you were off having delicious hot dogs and celebrating the soon-to-be birth of this fun nation this time a week ago. So, Uncle Mike, that's probably why you're seeing an overwhelming amount of data staring back at you right now, because we gave you an abundance of riches on the show this week. We have the movers and shakers going back not just 1 week like we normally do on the show, but a full 2 weeks, sir. So now you have a choice, sir, as the guest. You can choose what you want to do, how you want to proceed. You can go all the way back 2 weeks and give us the movers and shakers from 2 weeks till now. You can go super hardcore and do both 2 weeks and 1 week. You can just do 1 week. You can say F you and make me do it all myself. What do you feel like, sir?
I'm going to do them both.
Ooh.
I'm going to start off with 2 weeks.
Hardcore.
I mean, it's like the great Casey Kasem, America's Top 40. Remember that radio show from back in the 80s?
I do recall it, sir. Yes.
So, I mean, I'm getting in touch with my inner Casey Kasem today. All right, listeners, keep your feet on the ground and keep reaching for the stars. Let's start out with the dark side. 2 weeks out, the dark side, we have hard red winter wheat coming in at minus 1.98%.
I like it.
Now,
you get points. Not many people come on and know what HRW wheat is. You get a bonus point, sir.
Well, HRW wheat is primarily grown in the Great Plains and has a medium to high protein content and strong gluten, making it ideal for both breads and noodles.
Spoken like a true boy from St. Charles.
Exactly. Spoken like a true boy who looked at AI before the show and prepared for the show notes. Coming in at number 4 on the dark side, we have the Nikkei yen, down 3.32%. Not a lot of people know this, but AC/DC, they're actually bullish on the British pound, since we're talking about currencies. If you listen to their song Money Talks, there's a line in there that says the dollar's up, down, you better buy the pound. So AC/DC's not on this, but they're bullish the British pound.
I did learn that. We had an FX guy on who's been a regular on the show, and he mentioned that to me, and I was stunned because I've listened to that song a million times, and I never realized they were talking about the pound. But yes, they do actually say better buy the pound. You're right.
Exactly. So we got all sorts of crazy, useless knowledge coming on today with that, by gosh. Next, we have rough rice coming in at negative 4.45% in the last couple of weeks. We have lean hogs coming in at negative 4.52% in the last couple of weeks. And number 1 on the dark side for the last 2 weeks, we have class 3 milk. People are not drinking milk over the 4th of July. They are actually, there's just not much demand for it. People must be drinking soda pop and beer, apparently, not milk. But 4th of July is over. Kids, drink your milk again, by gosh. Coming in at number 5 on the light side, we have soft red winter wheat. Soft red winter wheat is grown in the eastern U.S. and has low protein and weaker gluten, making it suitable more for cookies, crackers, and cakes.
I'm less impressed now that I know you went to the dark side of AI, sir.
But still sound kind of cool, though. Anyway, number 4, we have feeder cattle coming in at 6.03% in the last couple of weeks. Number 3, we have the beloved Bitcoin gaining 6.07% in the last couple of weeks. Number 2, we have oats coming in at 9.51% on the last couple of weeks. And the number 1 light side commodity for the last couple of weeks is copper, coming in at 9.65% of gains. Now let's make it over the last couple of weeks. Things are a little bit different now. It's going to be a different top 5 in each for both the dark side and the light side. On the dark side, coming in at number 5, we have soybean meal down 2.12% on the week. Number 4, we have natural gas. Now, natural gas, whenever it doesn't move 8,000%, it is kind of a big deal. And this is kind of a big deal. And natural gas was only down 2.23% on the week. Number 3, we Bon Scott, God rest his soul, Brian Johnson, Angus Young, no love for the British pound. Still, the Nikkei is in the spotlight, down 4.22% on the week.
Now you're intriguing me. Did you go to the big AC/DC show when they came here like a month ago? I was out of town, unfortunately. I missed it. Did you go?
I did not.
That would have been something to see. I don't think they roll through Chicago very often. I think some of them are dead now, so it's just kind of a last chance hurrah kind of thing. But I was sad that I missed it. That would be a fun one to see at Soldier Field. Old time
seems to be a theme right now because Ozzy Osbourne just did his big last show.
He just did his last show. Yes.
So definitely a new era in music, that's for sure.
You're not a Swiftie, Uncle Mike? What's wrong with you?
Oh, well, I mean, it's like Andy Reid, the head coach for the Chiefs, always said that he set up Taylor Swift and Kelsey. So maybe I need to be a Swiftie. Who knows? Number 2 on the dark side, we have soybeans down 4.52%. And the number 1 dark side commodity for the week, we have corn coming in at negative 5.45%, which that surprises me because everyone wants to buy corn on the 4th. Oh, you know what? This is for this past week, so it's after the 4th of July. So it's kind of like how you're supposed to sell your pumpkin futures right after Halloween.
Yeah, see, I figure you're going to grab into your pumpkin futures joke. See, I know.
Yeah, so that's probably what it is. All right, on the light side, we have live cattle coming in at 2.42% on the week. We have beloved Bitcoin coming in at 3.53% on the week. We have feeder cattle coming in at 3.78% on the week. Palladium up 3.96% on the week. And the number 1 light side futures contract for the week, we have copper coming in at just under 9% at 8.98%.
Well done, sir. Good week to be the manager of the midi metals. They're pretty hot out here.
Yeah, they're looking pretty good this week. all these farewell concerts and then
they're doing good. They're doing good. Well, you get bonus points, sir, because outside of me, no one else in the long history of this show has ever regaled our listeners with 2 weeks worth of movers and shakers. So you are in some rarefied company now, Uncle Mike, of pretty much just me and you. No one else has even dared to attempt it, sir. So bonus points for you. When I threw it out to you, I half expected you to do 1 week and kind of bail on the other. So I was impressed. Even though you leaned on AI a little bit, that's kind of the crutch of our times. It's understandable. As we keep on rolling, listeners, I will now spell you, Uncle Mike. You can rest your voice as we talk a little bit of CVOL movers and shakers. Remember, listeners, you can run these reports for yourselves. Just type CME and CVOL into whatever browser you're rocking out there. Set your high-low range. We're only going to go back 1 week. We don't get the 2-week option in CVOL, unfortunately. So we're going to do 1 week. It is the name of the show, after all. And then you're going to go to the aggregates tab. So make sure you're looking at all of the aggregates. There's a lot more CVOLs we can't squeeze into the show. We can't do every single one. We're just going to do the aggregates, listeners. All right. To our list we go. Top of our list this week, we have the Treasury yield vol, 95.4, up 1.3 points today. And hanging out towards the middle of its range, the range for the week, 94.10 to the downside, 98.32 to the upside. So towards the lower middle portion of that range. Below it, we have the aggregate energy CVOL, 51, pretty much even, up about a point today, so popping a little bit today. Its range for the week, 50 to the downside, 51.42 to the upside, so towards the upper band of its range for the week, but only about a little less than 1.5 points on the week. Not a huge vol week on the energy front. Below it, we have the aggregate commodities CVOL, 35.36, up about a third of a point today. On the week, it's had a range of 34.99 to the downside, 35.85 to the upside. So again, kind of hanging out towards the middle portion of the week. And then everything else we're going to talk about, listeners, is pretty much pinning the needle to the downside from a vol perspective. Let's go out to the Treasury from a price vol perspective. How much is it moving from a vol perspective out here this week? Not yield vol, but price vol. You know it's going to be pretty low, and that is the case. 5.19. Kind of unched today. That is the low for the week, the high 5.42. Below it, we have the aggregate ag products CVOL, 1984, a heck of a year, off 0.2 today. That is the low for the week, the high 20.76. So ag vol coming back to earth this week as well. FX vol, 8.35. That's off about a third of a point today. That is the low for the week, the high 8.98. So FX vol giving up about 2/3 of a point this week. That's a big move for FX vol. And below it, at the bottom of our list, we have the aggregate metals CVOL, 16.92. That's off about half a point just today. That is the low mark for the week. The high, 17.74. So metals vol giving up nearly a full point this week as well. So both FX and metals vol don't have a lot of vol to give, and both giving up a good chunk of a point this past week. So vol coming back to earth in both of those segments. So we did a lot of living already. Listeners, going out 2 weeks, going out 1 week. We have a lot of products we want to get to, but I know Uncle Mike is champing at the bit to get started at his beloved trifecta of products. Then we'll see if we can squeeze in some more on top of that. And of course, his beloved crypto. But that said, Uncle Mike, of your beloved trifecta of the 10-year note or silver or equities, where you want to start?
Let's start with equities. It's an exciting day today.
It is an exciting day. To the world of equities, we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, it is an exciting day. Let's go find out why. Go into that CMEGroup.com/TWIFO drop down. Then you're going to go in the asset class. You're going to go down 4 slots to equity indexes. At the top of our list, you're going to see U.S. Index E-mini. And then, of course, we're going to hang out in Uncle Mike's beloved S&P 500, which I do believe he has some stuff he wants to say about. Probably right about now, Uncle Mike. What you want to say?
Well, I mean, of course, just like I said earlier on the option block, lots of excitement happening today. In fact, never before in the history of the entire stock market has there ever been a better time to sell than today. New all-time highs. Now, of course, I'm not saying that you should sell. I'm just saying that mathematically, there's never been a better time because of the fact that we are at all-time highs. The exciting part about this is, number one, it's an all-time high. That's always exciting. But number two, if you're concerned that we are at all-time highs, or you're concerned of the gains that you've had in your stock portfolios, you could perhaps look to maybe go long some futures on the VIX, or perhaps maybe buy some puts on the E-mini. There's a lot of choices right now with the VIX levels with which it's at right now at the 15 level. Option premium is not overly expensive as it has been. And there's a lot of fun things with which you can do right now in this market.
You're a straight ride them until they die, Uncle Mike. Even at these new all-time highs, no scaling back. I know we talked earlier about how, optionality not exactly super expensive right now. If someone is riding the beast, but they're getting a little bit spooked, are you maybe in your strategic night starting to add any hedges, any thoughts towards that end, sir?
Well, what we are doing in our stock portfolio, no, we're not doing anything, but we are starting to look at rolling up some of our hedges. The reason we're not looking too closely yet is that we're hedged 1 year out in our long-term hedges. I'm not talking about our monthly hedges. That's a whole different story. But for our long-term hedges, we're hedged a year out. And so on the year, we're up only maybe 6-7%, something like that. So we're not looking to take any action as of yet. The last time we took action was in early April, when we actually had the major downturn, if you will, when we were down, like maybe 12% on the year, roughly 20% from where we are right now. And the opportunity that presented itself at that point is we did turn our long-term put option into a put spread, meaning we sold a put ridiculously far out of the money for the same time frame. And because of the spike in volatility with which we had, combined with the downturn in the marketplace, we still were in a position to where we could look our clients in the eye and say, okay, we turned this long put option into a spread, a put spread, a vertical put spread. However, it doesn't, from a hedging standpoint, you're not at risk until the market goes down over 30%. And we were able to do that. And yes, we took on more risk by doing it, but we still had a 30% downturn hedged on the year. And the benefit of what we did is when the market bounced back, we were able to buy to cover the short puts we sold right around the 4,000 level in the S&P 500. And we were able to buy them back for a very low price. And by doing that, that reduced the cost of our hedging on the year. So at this point, we're not necessarily looking to roll up as of yet. We probably wouldn't until the market goes up about 10% for the long-term hedges. Now, for our monthly hedging, a couple things with which we're looking at would be just to roll up. We got in probably about 3 weeks ago, so we've had a nice little move in the market. But with where we are right now at our hedges, for our short-term hedges, we're not rolling up just yet, but we're probably going to be Probably going to be getting close to taking a look if we get into the mid 63s in the S&P is my guess of when we'll start to look to make a move of rolling up our puts or doing something along those lines.
There you go, listeners. If you're wondering what he's up to out there in good old S&P, what are you up to out there? You just riding the machine north, listeners? Hard to blame you if that's the case. I'm looking at all the flow out here, listeners. You know the deal out here in all things E-mini. It's just a beast out here in the S&P 500. Let's see how many contracts are on the tape in this week of new all-time highs. 2.2 million contracts. It's a decent amount. It's actually not as high as I expected. I thought there would be more. I thought we'd be well north of 2.5, if not 2.8 or something along those lines. So yeah, it's an active week. But again, we're coming off the holiday. Some people are still maybe traveling out there. Middle of summer, not exactly usually a banger period, even if we are at new all-time highs. And once again, of that paper, you add in today's paper going away in about an hour, 18% of the flow, 16% going away tomorrow. So you're already at close to 35% right there. And then you add in the going away in 4 days, that's another 7%. So you're talking well north of 40, about 42%, almost 43% is going away in the next 4 days. That's just the way the S&P rolls these days. So it is very hard to dig into some of these and really find a lot of meaningful flow, especially when you see the big flow today is the 52-quarter, 52.75 put spread trading 35,000 times. So that's 70,000 contracts right there, listeners. A lot of filtering through the noise to find any sort of signal. But maybe if you're really excited, you like the 6400s going away in 5 days, listeners. Those trading about 2,600 times today. That seems to be the hot contract out there. 6,400 going up in about 4 days out there. Actually, 5 days out there. I don't know, Uncle Mike, 6,400 in 5 days? You be down for that, or is that a bridge too far even for your bullish heart, sir?
That's probably a bridge too far for my bullish heart. I mean, we'd have to. It's possible, but a lot of times at all-time highs, we don't necessarily make the big moves like that quickly. So I don't think I'd feel comfortable. I would be a seller of those calls if I had to be.
I see what you're putting down there. So you don't even want to hear about these then. The 6,100 puts trading 13,000 times going away in 8 days, Uncle Mike. Going back in the other direction, 6,100, pshaw to that, you say. You want nothing to do with that. 5,000 of those trading on Monday, mostly opening. 2,700 on Tuesday, 2,600 Wednesday, about 2,600 again today. So they've been remarkably consistent the rest of the week. So 6,100 puts. Again, these are going away a little bit longer term. 8 days, that's kind of an eternity in the equity markets right now. So 6,100 puts or 6,100 calls. I don't have prices on these, listeners, but I'm curious, which way would you rather go of the two? Gun to your head. You got to buy one of those bad boys. Which way are you going? If we go a little bit farther out, let's go out, I don't know, all the way out 3 weeks. Dare we do it? 21 days. How about 6,500s? That's where the action is right now in the S&P, trading about 6,500 times this week. Looks like all of that was on Monday, about 4,500 on Monday, 1,300 on Wednesday. The rest scattered throughout the week. So 2 big chunks of 6,500. So again, if you think 6,400s in 4 or 5 days is a bridge too far, maybe you prefer 6,500, but in 21 days. At this pace, we were at below 5,000 not that long ago. So maybe 6,500 isn't as wild as it seems on the surface out here. Really quickly, how are we looking from a skew perspective? Listen, let's go out a week. Let's go out a nice standard weekly range. And you know what? We are saying it's not that expensive to buy protection, but it is starting to get juicier out there from a skew perspective. The puts last week, listeners, about 9.8% bid. This week, 13.2% bid. So some folks are starting to take Uncle Mike's advice, maybe roll up, or at the very least start pondering the notion of hedging some of these gains, because that skew starting to get a little bit juicier. The calls, they were 7.2% cheap, now 9.2% cheap. So that's the steepest we've seen the skew in the last couple of weeks out here. I'll have to go look to see if I can find historically how we're hanging right now from a skew perspective. Let's do that right now really quickly. Let's just look historically how we're hanging out from an S&P 500, just 30-day skew perspective. Yeah, interesting. We're it's only in the 11th percentile, all things considered. So that actually is not too bad. Again, compared to where it was a week or two ago, it's looking a little bit richer, but historically, we have a ways to go before those puts get absurdly rich. Now, if you go all the way out to, let's say, 25 days, now you're talking about 18% bid. So, and if you go out to 36 days, you're talking 20, almost 21% bid, and then 22, almost 23% if you go out to September. So now you're starting to talk a little bit rich, and you go beyond that, my goodness, you go all the way out to October, you're talking 27% bid. So that is getting a little bit extreme. So again, depending where you're lining up on the term structure, some folks might be starting to get a little bit skittish at these levels. But again, it's understandable. We are at never before seen all-time highs, as Uncle Mike has reminded us multiple times. All right, Uncle Mike, where should we head next, sir?
Well, let's jump on the boat with the 10-year note.
To the boat we go, listeners. To rates we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, welcome to the world of rates, listeners. Head on over to that cmegroup.com drop down, pop out of equity indexes, go down 2 more slots, 1 from the bottom, 2 interest rates, then in U.S. rates and product family, and go near the bottom of the list in the product categories to the 10-year. Uncle Mike, I'll have you know I defended you yesterday, or at least your beloved product, because we were doing our futures rundown show. And for some reason, the 10-year note was not included in the volume rundown, which is a huge omission because it's usually the number 1 volume leader. So I made sure it was included just so yet your favorite product was represented, Uncle Mike. What do you say?
I much appreciate that. Thank you very much.
I said Uncle Mike was on the show right now. He would riot and storm off in protest. So we had to correct that oversight post haste. That said, sir, what was catching your eye in the 10-year note this week?
Well, I mean, we're gaining a little bit of yield again, so we're getting some sellers in the bond market. So just over the course of the last week, looking at before the 4th of July holiday on the 3rd, we got a yield on the 1st of July, as we're starting the month, we got 4.26%. As of yesterday, we got 4.34%. So we got a little bit of some selling coming in, if you will. I'm curious to see just when we don't have technically an inverted yield curve, but right now, 1 month and 3 months are roughly the same yield as the 10-year still. And it's not something to where, the argument of should you buy the 1 year or should you buy the 10-year, should you buy the 1 month or the 10-year? Well, of course, if God were to tell you that interest rates were going to stay identical forever, then you might as well just buy the 1 month or the 3 month because you're getting the same yield on the 10-year anyway. But as we all know, interest rates don't stay the same forever. One thing over the course of the last few months that I think has been healthy for the bond market is that the 20-year and the 30-year are now above the 10-year in terms of yield. Both of them are at 4.87%. And if you just look over the last few days, they've both been very similar to where they are in terms of the yield. So we do have higher yields on long-term bonds, which is a good thing. It's a healthy thing because it should be higher yields on longer-term bonds. However, I'm not sure how long this is going to last. President Trump does not like what he deems as high interest rates. He's a low interest rate kind of guy in terms of his own words. However, we still have Powell in there, and President Trump does not have the direct ability to fire him. So it's going to be interesting to see over the course of the next couple of years the banter that goes on between the Fed and the president with where we go and what we do. I know that we're supposed to get, I believe, 1 rate cut this year, if I'm not mistaken, but you never know. Stuff like that can change at any time. But with what's going on in the 10-year note, and that in and of itself, not a lot, but what's going on around it and what's going on in the world of yields, quite a bit.
All right, let's see what's going on in Uncle Mike's beloved 10-year note. Is it a hot week? The answer is fairly decent, respectable. Closing in on 2.5 million contracts right now, 2.49 million to be precise. Of that, unlike the equities, not hanging out all 0 day, 31% of it going up in the contract that expires in 15 days. So we will hang out there. The 10-year note right now, 111.06 in that front future. Excuse me, listeners. What is the vol in that 15-day to go contract, listeners? It's at a impressively Impressively anemic 4.5 off 0.43 this week. So Treasury vol coming back to earth this week. Skew wise, again, not a huge story on the skew front either. The calls last week, 3.9% bid, now 4.5% bid. The puts, 2.8% discounted last week. This week, 3.9% cheap. But to the realm of the puts is where we go. That is the big dog out here in the 10-year this week, listeners. The 110.5 puts expiring in 15 days, going up nearly 100,000 times, 96,000 times. Again, that just shows you how much paper we're talking about in this beast that is the 10-year, listeners. It'll routinely put up just in one put more than most entire complexes will do. And again, it's not even that spicy of a week, all things considered out here. The big day was Wednesday, 45,000. Of course, we had Fed minutes this week, so that's obviously playing into that. A lot of paper coming off the board on Wednesday as well, so folks waiting for the minutes and then unwinding, it seems like a whole bunch of 110.5 puts, 24,000 on Tuesday, 16,000 on Monday, and about 10,000 going up today. Still a remnant OI of about 107,000 on this strike. So even if folks were bailing on Wednesday, there's still a good chunk left on this strike. Again, that just shows you how much paper we are talking about here. And number two, listeners, was the 112 calls, again, expiring in 15 days, listeners. Almost 91,000 of those bad boys going up this week. This one, folks were bailing on all week long. They didn't wait till the minutes later in the week. They started bailing on Monday. 35,000 on Monday, closing there. Almost 21,000 on Tuesday, again closing. Wednesday, 23,000, again closing. And today, almost 11,000 going up today against a remnant OI of 185,000. So they were closing all week. They still got nearly 200,000 contracts to go. So Uncle Mike, you're a 10-year guy. 112 calls or 110.5 puts. Gun to your head, you had to go for one of them. Which way you going, sir?
I hate to say it, but I don't hate to say it, but I'm going to go with the 110.5 puts. I think the likelihood is more on the puts.
Seems like puts are your friend out here this week, Uncle Mike, because that seems to be where a lot of the action is lining up. If you go out to September, a full 43 days, the 110 puts pretty active out there as well. 87, almost 88,000 of those going up. Again, this was a weird one as well. They weren't putting them up on Fed minutes day. They were doing them on Monday again. 58, almost 60,000 going up on Monday, again closing. So folks weren't waiting for the Fed minutes. They were getting the hell out of Dodge on Monday. 11, almost 12,000 on Tuesday, 8,000 on Wednesday. 11,000 on Wednesday and about 9,000 on Tuesday. 8,500 today, 60,000 left open on the strike. So folks appear to be bailing on some puts out here. And if that's not enough, how about 104 puts? I mean, they got puts for days out here in the 10-year, listeners. So hopefully you're down for a little bit of 10-year note put action. But I know what Uncle Mike also has cast his gaze upon. And it's, again, if you looked at our movers and shakers, particularly over the past week, it has been naught but a metals story. So to the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to that drop down we go again. We pop out of rates. We go all the way to the bottom of the list to the metals. And then we're probably going to kick things off in silver. Maybe Uncle Mike will surprise us and go to gold. But Uncle Mike, speaking of surprises, how surprised are you? I mean, if you had said that most people at the start of this year, halfway through, would precious metals in particular be pretty much dominating the list of top performers for the year, I think most people would have been, I don't know, probably not. maybe some hardcore gold bugs would have said that, but a lot of people were fading the shiny stuff coming into this year. And lo and behold, so far year to date on the list of assets that trade at places like CME, gold is actually number 5. You've got palladium up there. You've got platinum, even copper's up there, Uncle Mike. It's a good year to be a metals bull, sir.
Yeah, no doubt about that. Like I said earlier, I think there must be correlation between all the farewell shows from AC/DC, Guns N' Roses, and Ozzy Osbourne, and the metals getting excited. I can't think of any other possible thing. Oh, wait, there is that inflation thing, but it might be that. But who knows?
So where are we starting? Silver, gold, what's floating your fancy, sir?
I mean, we got to go with silver. I mean, the listeners wouldn't want me on the show if we didn't start with silver.
They have already said in the chat that silver is about to come like a thief in the night. So there you go. They're already saying your taglines for you, Uncle Mike.
Oh, man. I don't know whether to be flattered or just think I need to get some new material. One of the two.
You might need some new material.
I've been saying the thief in the night for 10 years, though. I don't know if I can get rid of that one.
What's catching your eye in silver, sir?
Well, I mean, just from a technical standpoint with silver, it's been going straight. I don't know if I would call it straight up, but it's definitely been rallying over the course of this year in that with where it's at right now compared to where it was in early April, I mean, we're up well over 20%. And so that can be an exciting thing. We did hit new all-time highs in silver roughly 3 weeks ago. We're knocking on the door of that again. So I shouldn't say not all-time highs, like 15-year highs rather, since 2012, so 13-year highs. So we are knocking on the door of that again. And it's going to be, I think that we could be running into a little bit of technical resistance because we are at levels with which we were in October of 2012. And with this thief in the night theory that we got going on, the thief's been kind of laying low for the last 10 years. And he might not have the energy to take silver above the highs with which it was in October of 2012. Now, should he do that, next level of resistance from what I'm seeing would be from February of 2012. The high at that point was probably about 10% higher than where we are now. And then, of course, the all-time highs for silver would be in April of 2011. So we're getting there, but the thief needs to take a little bit more. He needs to become a little bit more resourceful if he wants to break through these highs.
Yeah, the thief was looking rough earlier this year, and a lot of our silver bulls in our audience were lamenting that, gold was at new all-time highs, 35.5, somewhere in that range, and silver was selling off, and then gold sold off, and then silver sold off more, and then gold kind of stabilized, and then silver kind of found its oomph and started hitting, new all-time highs out of the blue. It was a very, very strange year for silver out there, and we'll see if it has the energy to take a second leg up here, listener. Have you been slinging some silver? It looks like some folks are slinging some silver. Again, silver is never going to be, the E-mini of the world. 39,000, almost 40,000 contracts on the week. So that's actually a decent week for silver, all things considered. But again, we were just talking about almost 100,000 contracts in one put in the 10-year. So very different beast from a volume perspective. 39,000 of that, about 42% going up in the AUG contract. Has about 18 days to go. We're going to hang out there. What is the vol in silver right now in August? 26.83, up 1.5 points. So getting a little bit spicier in silver this week. Skew-wise, the calls last week, 5.1% bid. That has come in a little bit, 3% bid now. And the puts last week kind of unched, 3.2% discounted last week, 3.3% discounted this week. And in terms of action, it was all about the 36 puts in August. They went up 1,221 times this week. It looks like including about almost 1,900 going up today out here in silver. So that's kind of a intriguing. Let me just see if I could find. I don't want aluminum. I want silver, please. Let's see if I could find some prices on these silver. What were these? 36 puts. Here we go. 15 cents, almost 16. That actually seems, as some traded. Oh, these are the ones I want. These are the AUGs. These are about 40 cents. So that makes a little more. That sounded cheap, 15 cents, but about 40 cents. Uncle Mike going up about 1,000 times today and about almost about 1,500 times on the week. I don't know. Or just buying puts in silver, is that just anathema to you, sir?
I mean, I'll buy puts for long-term hedging of silver, but in the short term, especially now, no, I think even in the short term with silver, I would actually tend to be more bullish than bearish.
Does it surprise you that the big dog out of the gate is some puts?
It actually does. I would have guessed it would have been some calls.
We'll tell you what. We'll see if we can find some calls for you, too. And they aren't that far behind, that to be said, about 1,100 of the 38s also going up in August, listeners. The 38s trading the big day again today. So today, kind of a spicy day in silver. 500 going up today against an OI of 1,000. About 200 on Wednesday and 200 each, actually, every other day this week. So kind of an active contract. So I'm guessing of the two, Uncle Mike, 36 puts or 38 calls in August. You're going the 38 call route. Am I correct, sir?
You are correct, sir. The 38 specials, baby.
Let me see if I could find a price for you. Once again, it's starting me in the rolled aluminum. I don't care about the rolled aluminum, Uncle Mike. I want the 38 calls, and I can get 38 halves. That's not doing it. 38 halves are trading 42 cents, Uncle Mike. Maybe that floats your boat. I'm not seeing prices for these 38s, but 38 halves. There you go. We can go for those.
We'll do this.
Interesting stuff out here. Listen, well, we're coming up against it, Uncle Mike. Any other products you want to squeeze in? Should we do a little bit of the big dog of the metals, which is gold, before we get out of here?
Why not?
All right, listeners. Go into that drop down, squeeze out a silver, and then we're going to go to the top of that product category, which is gold. It is the big dog. It is inescapable. For a little while there, it was the number one best performing asset amongst all the futures that we track on the futures rundown. It has since fallen to number 5, still respectable, but just a wild year for silver. You know the story by now. Topping out somewhere around 35 half, a little bit north of that, I believe. Hanging out 33, 32 as we were kicking off the show out there today. A decent week out here, 148,000. But if you know anything about gold, you know it should be putting up probably about 100,000 more than that, probably around 250,000. So all in all, you know, a little bit light. But again, it is middle of July, so we don't typically expect wild banger weeks coming out after July 4th. That said, Uncle Mike, gold hanging out around 3,300 and change. What's catching your eye?
Well, it's still been kind of channeling ever since April. So we had the big run with which we've had over the course of the last couple of years to where we've pretty much doubled since October of 22. And it's just kind of hit a stopping point over the course of since last April. So I think we're off roughly 2 or 3% from the all-time highs, but we've kind of been there. So I didn't do it, but those of us that did sell gold straddles have done pretty well over the course of the last few months, I would imagine.
That is indeed the case. Uncle Mike, that music means you have survived another sojourn through the world of TWIFO. You even did a impressive 2-week spectacular on the movers and shakers after being on your another program already, sir. How's your voice holding up?
I'm doing great. I could do this all day. Not every day, though. I saved that for you.
I was going to say, if that's the case, we might have to put you to work so you can get a true taste of what it's like. That said, Uncle Mike, if folks want to get a true taste of Uncle Mike goodness in the equities or the metals, they want to get on the boat with a 10-year note, or they want to lure you to the dark side of crypto, where should they go? What should they do?
Head to my website, stcharleswealth.com. If you're looking for a financial advisor who enjoys the derivative product instead of trying to pretend that they understand it, check me out. I would love to have a conversation with any listener from this network, stcharleswealth.com.
stcharleswealth.com, the place to go to kick the tires and light the fires. And you know where to go to check out these reports that our friends at CME generate for you for free because they like you folks. Take advantage of it. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern. Dr. Vix and special guests in hand to talk about another wild week on the vol front. What's popping off? What trades are catching our eye? Got to tune in to find out. Speaking of trades, come back if you're hanging out in the pro. One final time tomorrow, the official after party of Vol Views. It's called Options Oddities. It's pretty darn cool, if I do say so myself. What weird, wild, and spectacular activity will we unleash upon you? Well, you got to tune in to find out. Only place to get it, theoptionsinsider.com/pro is the place to go to learn more. See you back here tomorrow, then back again next week with another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.